Hi, I'm Max Keiser. This is the Keiser Report. Scientists say now that cognitive ability declines after 45 years of age. In fact, mine is speeding up. I'm becoming clairvoyant. I can see you and what you're thinking. Stacy Herbert, hello.
Max Keiser, I have a great headline here. It's the front page, actually, of The Economist magazine, Save the City. The threats to the world's most global financial center, and as you see, that's the city of London being blitzkrieg there. But I thought, as it's a war, a good idea would be to destroy the city in order to save the city.
Yes, let's destroy the city to save the city. This is the American way.
Now, Max, I'm going to read a quote from this Economist piece, and I want you to interrupt at any time that you're just so offended by this quote, okay? London is by many measures the world's biggest financial center, and weakening it is in nobody's interest.
Well, okay, financial center, by that they mean financial fraud center, and by weakening it is in no banker's interest. Yes.
Least of all Britain's, they go on. Better regulation of banks is certainly needed, especially to protect British taxpayers. And so far, the city bashing has been mainly rhetorical, but running down one of the world's most successful and mobile commercial clusters is folly.
What do they mean, rhetorical? What's the Occupy movement about? What about people dying in the streets to fright the banksters? This is the Economist with the blinders on. It's not rhetorical. You know, it's an insult to the people who have given their lives to fight these banksters. They call it rhetorical, you putz.
And in a section called Strangely California Doesn't Talk Down Silicon Valley, finance, the funneling of savings to their best use, is a vital industry. Britain is very good at it, leading the world in various financial markets, including foreign exchange and over-the-counter derivatives.
Comparing it to Silicon Valley, fail. More like the ersatz valley of death, where people's pensions and savings go to die, channeling savings into the black hole of fees and non-accountability, malfeasance, and fraud. It's more like it.
Well, exactly. They didn't even mention that, and I want to refer to a headline we discussed in episode 226, revealed how city fees are eating into our pensions. And in the article they said, highly paid city traders are depriving pensioners and savers of thousands of pounds through high management fees that are often hidden, according to leaked advice provided by consultants to the Treasury.
Yeah, well, let's be clear. The rehypothecation scandal ran through the city because of the absence of regulations and regulators, which have given us MF Global, AIG, Bernie Madoff. And, you know,
and it goes on and on.
And the list goes on. A river of fraud runs through it. And again, it's not rhetorical if people are dying to fight these schmatas in the frickin' city.
Well, Max, let's look at another headline which disproves everything that the Economist says and proves that I am right, that we must destroy the city in order to save the city. UK's bailed out banks face new £30 billion hit. Concerns over the outlook for the banking industry have intensified as analysts have warned Britain's state-backed banks face more than £30 billion of new losses over the next 3 years.
These aren't new losses. These are losses that are on the books, off the balance sheets of the books, that now, after they got the government to impose the first round of bailouts and then impose austerity measures to pay for the bailouts, they're now going to reveal the next tranche of debt. Now, when this is revealed, then they'll release also more austerity measures, and then they'll reveal more losses. So it's a death by 1,000 revelations. You know, the dance of the veils, you know, coming off, and we see trillions of debt back there off the balance sheet, the global banking cartel. And of course, whenever it comes for them to report debts on a quarterly basis that might impact their earnings and bonuses, of course, we know from documents from Lehman Brothers and others, they play a reciprocity game where they park each other's debts on each other's books for a few days to escape having to report those debts, therefore making their earnings artificially high. The earnings in the UK and the US for banks are supposedly up because they don't reveal the debt until it's time to put a gun to Mervyn King's head and threaten to kill him unless they get more bailout money, because they're assassins, because they're whores, because they're punks.
Well, Max, they're also very well paid. Chief executive pay outstrips company performance. So chief executives in 87 of the FTSE 100 companies took home £5.1 million in basic pay, bonuses, share incentives, and pension contributions in 2010 to 2011, a new report reveals. This is from the Institute for Public Policy Research, and they found that the total remuneration of chief executives increased by 33%, while the average increase in company shares was up only 24%.
Well, there's no laws against stealing in that industry. So, of course, their take-home pay is going to be high because there's no laws against stealing in that industry. And Mervyn King keeps interest rates near 0% to make the stealing that much easier. Ipso facto, the robber barons, at least the robber barons from the 19th century, built stuff like railroads and, oil industries. Here, the robber charlatan barons of the City of London and Wall Street build nothing. They're just paper Ponzi scheme pyramid building schmucks.
Speaking of schmucks, Max, I have this headline here. Blair Incorporated's baffling increase in earnings. So I just said that chief executives, their pay was up 33% over a few years. Well, Tony Blair's is up 40% in the last year. Accounts for Windrush Ventures, an obscure company that operates under the trading name The Office of Tony Blair, suggest 2011 has been a successful year for the former Prime Minister. Windrush saw its turnover rise to just over £12 million, up from £8.5 million in 2010, and pre-tax profits rose from £729,000 to £1.1 million.
Windrush? Tony Blair figured out a way to commodify his flatulence and get Goldman Sachs to use as collateral to issue like billions of dollars worth of Tony Blair flatulence bonds, which are now sitting in the British pension accounts. Yeah, of course his earnings are up. Tony Blair, remember, Prince Bandar in his office told Tony Blair that unless you call off the investigation by the Serious Fraud Office into the slush fund between BAE and me, Prince Bandar of Saudi Arabia, you can't guarantee there won't be another 7/7 bus bombing in London. Tony Blair, sitting Prime Minister, threatened by a terrorist act, bent over for the Saudi prince. He bent over and he emitted some flatulence bonds, which are then worth $20 billion, according to Goldman Sachs.
Well, as the numbers show, there was a 40% increase in his income, but there's no way to actually get into the details because there's so many shell companies and offshore companies and it's very complex, which just seems very bizarre coming from a former prime minister who led an illegal invasion of an oil-rich country, that there should be some sort of oversight. This sort of blatant kickbacks that he's receiving is pretty remarkable.
And who's the accountant? KPMG? Deloitte and douche? Okay? The accountants, how come they're not coming forward with the real numbers? Oh, because they've been involved in all these scandals as well, going back to Arthur Andersen and the Enron scandal. Now there are less accountants, and they're equally corrupt as the investment bankers and Tony Blair, who did trade blood for oil, and he traded a lot of blood for oil, and a lot of money is in his pocket. The guy's swimming in blood. He should be in The Hague. He should be facing war crimes.
And one of these companies is actually registered with the FSA and able to give investment advice. So I wonder, Max, what his investment advice is. Invade an oil-rich country?
Invade an oil-rich country and emit flatulence collateralized bonds. That's what they did in Libya. I mean, Muammar Gaddafi ended up really, a term as whatever he was over there, dictator, eventually having to be succumbing to Tony Blair, who came in there and stole all the money with Goldman Sachs, and who ended up, in an uncompromising position on the floor there, dead, due to the ability of one side to float city collateralized paper over the guy with the actual oil. That match the guy with the oil should have won that match, but no, Tony Blair won that match because he's got the accounting agencies, the investment banks, the whole entire government, totally corrupt with fake, bogus paper at 1%, trillions of dollars with it used as leverage to undermine everybody except himself, pays himself a huge bonus. Thank you, Tony Blair, you freaking terrorist.
Now, speaking of bogus, that's my next headline, my final headline here, Max. Offer to buy Kodak ruled bogus. U.S. District Court Paul C. Huck in Florida summarily ruled in favor of the U.S. Securities and Exchange Commission in this lawsuit against Alan E. Weintraub and his firm Sterling Global Holdings. Now, this man, earlier in 2011, he apparently sent a letter to both Kodak and to AMR, the parent company of American Airlines, and offered to buy them for something like over $3 billion. But it turned out that he had zero assets or no money, so the SEC has sued him, and I guess for $1 million. He doesn't have the money to pay that. But in his own defense, he filed a 2-page summary saying that he maintained he didn't violate any rules, that he has never received any letters from any banks telling him he can't borrow the money needed to buy Kodak and or AMR Corporation. So he said, you know, he did go into a bank and said, hey, I want $3.1 billion, but they never sent him an official notice saying, no, we won't give you that.
Look, a private equity firm doing leveraged buyouts, as we used to call them in the 1980s, they don't have any collateral. In the case of Eastman Kodak or AMR, parent company of American Airlines, you don't have any money. You don't have any collateral. You use the collateral of the target company to finance your loan.
Exactly.
So this guy just did what Steve Schwarzman does. He just went into Kodak and said, look, I want to buy Kodak. I want to buy AMR. I need a $3 billion bridge loan. And as soon as I acquire these assets, I'm going to sell a company off for bits and pieces and pay back the loan at some point, or create some other fakakta collateralized flatulence bond and have Goldman Sachs make another payday, whatever. But I don't get it. He's not doing anything different than any private equity firm. Carlyle Group, Blackstone, any of these guys, Carl Icahn. What's different about this guy? How come he didn't bribe Tony Blair? That's it. If he had bribed Tony Blair, the deal would have gone down. And that's the problem, Mr. Weintraub. You got to grease the right palms.
And the other thing they did note is that he had been convicted of fraud before, and you're supposed to put that in a letter when you ever submit to buy a company. But just because he's one of the, the bottom 99% or 99.9% who didn't get away with their fraud. It's not like the City of London doesn't have fraudsters galore. John Corzine, fraudster galore, but he's not being charged, so he can make bogus attempts to purchase AMR or Kodak.
It's a badge of honor. I don't know any banker that has not been litigated against or in some way involved in a lawsuit. I mean, J.P. Morgan, I think they have 3 major suits in the last 12 months against them for fraud.
Yeah, but they never have to admit guilt. That's the problem. This guy had to admit guilt.
Ah, he went to Judge Judy. He should have gone to the SEC or somebody, they could have just done a little under-the-table thing. Okay, well, there you have it. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming away, so stay right there.
When an uncomfortable question leads to a grave accusation.
Who is more xenophobic? The president, who isn't supposed to hide anything? Or someone asking him, why do you make a secret of it?
When the powers to be suppress the voice of those who think different.
We began experiencing very serious problems after the Saakashvili government came to power in 2003. That was when the problems began piling up. Interviews were now off limits to our journalists. They were often beaten up and humiliated in public.
When an attempt to protect property puts life in real danger.
We have been deprived of the only means of earning a living. I have got the originals of all the papers. They legalized their ownership rights on the basis of copies.
Freedom becomes just a stage prop. Welcome to the future.
Science, technology, innovation, all the latest developments from around Russia.
We've got the future covered.
Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Los Angeles and speak with Nomi Prins, author of It Takes a Pillage and of Black Tuesday, her recent book. You can find all of her work at nomiprins.com. Nomi, welcome back to the Keiser Report.
Thank you, Max.
All right, Nomi, I want to ask you about John Corzine and MF Global, but first, you're a former director at Goldman Sachs, so just to clarify to the audience, you were not there at the same time as John Corzine, correct?
Yeah, no, I came after he left. I was there through the Hank Paulson era.
All right. We've covered the Hank Paulson era. Now we're on to John Corzine. Now, it's been about 4 months since the collapse of MF Global. Not a single pair of handcuffs, or nobody's been frog-marched off the trading floor. You wrote on your blog that John Corzine, MF Global, and unaccountability. Do you expect Corzine will escape any accountability for his actions, Nomi?
It is looking increasingly likely that he will. He shouldn't. He had to have known exactly what MF Global did with its customer funds because he was part of the trade that required the use of them. So there's no way he doesn't know. There's no way he didn't realize that the regulations that talk about how to segregate customer accounts were being obliterated by him and his company. And yet Congress, in its show investigation with him, handled him with kid gloves, and there are no less than 7 regulators who are supposed to be monitoring what he did who have yet to slap him with anything. So it's looking increasingly likely like he's going to be just another one of these large CEOs who ransacks people's money and walks away, though he shouldn't, though he has committed a criminal act.
In the mafia, when somebody becomes a made man, they become untouchable. So none of the other mafia gangs can kill the guy because he's a made man. Is John Corzine now a made man in the mafia kleptocracy that runs our economy?
He's a made man because he's been part of that kleptocracy. He's one of the mafia guys. So the question is, will there be, will this investigation show that he's worse than the rest of the guys the mafia group turns against him? Or will they realize, you know what, everything's fine, this will just blow over, we keep him in our cartel and we move forward? Because he also knows a lot about what J.P. Morgan might have done with those funds, about what Goldman Sachs might have done with those funds. So it's best, in the mafia sense, for everybody to clamp down and shut up, which is kind of what's going on, or deflect. And in that respect, he keeps his cover.
All right, now the collapse of MF Global was possible through the infinite rehypothecation allowed in London. You were also a senior banker for Bear Stearns in London. So what are your thoughts on London as the center of this sort of derivative-enabled fraud?
London's always been a place where derivatives have less oversight. There is an FSA, there is a Financial Services Authority who is supposed to keep track of this and other things, but the issue is there are less bodies and less specialists within the FSA to determine where money's coming from, where it's going, how trades are being put on, and so forth. And so a lot of stuff slips through the sidelines, slips through the edges. But again, that happens in the United States as well. There were $175 million or $200 million worth of those customer funds that were rehypothecated or basically moved from the MF Global balance sheet in the U.S. to the MF Global Ltd. UK subsidy of MF Global, which would have been under the Financial Services Authority, that didn't question where that money came from or how it related to customer funds. So it basically turned a blind eye, which is what it tends to do. Although, again, the SEC turned a blind eye to the rest of the almost $1 billion worth of customer funds that also managed to disappear and be misused and misappropriated and fraudulently spread about by MF Global.
All right, let's dig a little deeper. Let's bring in J.P. Morgan and Goldman Sachs. Reports now suggest that MF Global was offering assets to Goldman Sachs in the days leading up to the firm collapse on October 27, but that J.P. Morgan never transferred the funds to MF Global as there was an outstanding $1.2 billion credit line the brokerage firm had with J.P. Morgan. So your thoughts on J.P. Morgan's role in the MF Global story, Nomi?
Well, first, look at the $1.2 billion again for a second. That $1.2 billion is equivalent to the credit line from J.P. Morgan. It's also a third of the credit lines that were available to MF Global in general. It was a significant chunk of what they needed to have in order to keep John Corzine's bets going. Goldman Sachs received some of those securities. We don't know what they are because, again, we have inept, non-transparent regulators running that part of the show, that they got probably very cheaply and probably used against some of their own transactions because they also have bets with respect to European sovereigns in derivatives and futures and in securities. So you have a situation where Goldman Sachs, and I mentioned this on my blog, is also the clearinghouse for some of these smaller transactions, the customer-driven transactions. Under Rule 606, there's a report for those, not delineated, but that mention that Goldman Sachs is one of the clearers. So you have a clearer that's been there from the get-go, that is basically getting some of these securities, the money not going through to MF Global to go back to the customers from where possibly and probably these securities are coming from. And you have JP Morgan, who's just sitting there keeping the money so that when it knows MF Global is going to go bankrupt, it won't have to spend as much time in bankruptcy court trying to get it back. It's just keeping it from the get-go.
How did JP Morgan get ahead of the customers? Because under bankruptcy law, they would be behind the customers under the bankruptcy of a futures trading corporation. How did they get ahead of the customers?
Well, because they kept the money. I mean, this is what we have to still see as being revealed by the faux investigators in Washington and so forth, and the regulators who didn't do their jobs. But if JP Morgan is sitting on money against credit lines from MF Global, knowing MF Global is collapsing, knowing those securities are being sold about at really cheap bargain basement prices, and that they come from customer accounts, and they keep them to begin with, it doesn't go into bankruptcy court. If this illusion that this money has just been lost continues to play out and continues to get ignored in terms of any form of legal criminal repercussions against it, JP Morgan effectively got before bankruptcy court before the bankruptcy ever happened. And then it's still going to be in bankruptcy court trying to get whatever the rest of the money is that it feels it's owed. So it's basically playing both sides, but it knew what was going on from before the company went bankrupt and took its chips from the table and has retained them, although the regulators don't seem to be either aware of this or publicly acknowledging it.
How is JP Morgan taking advantage of insider information not the same as confiscating wealth?
It is stealing money from MF Global's customer segregated accounts. That's one way it is stealing. It is taking wealth. It's confiscating what it shouldn't confiscate. As the credit line provider, and this is something that happened in any big fraud. If you look at the major bankruptcies in the United States and elsewhere, the credit line providers, particularly the big ones, and JP Morgan is a big one. If you're providing more than $1 billion to a company, whether it is Enron or WorldCom or MF Global, you care exactly what is happening to that company because you want those credit lines to either never be drawn upon so you can continue to have them open and get paid for them, or if they are drawn upon, you want them to be repaid as soon as possible. That's your game. You get paid to have them out there and take them back as soon as possible. So you're very aware of what's happening to the company. Now in August, in the summer, MF Global was already having conversations with the SEC about the fact that it needed to put up more money to continue its bets with respect to European sovereigns. So this was not unknown to the SEC and obviously to JP Morgan Chase and any company, any bank that would be extending a large credit line to any company that's involved in any kinds of bets. So this is how they have insider information. They see things as they're falling apart. They know not just how many assets MF Global might have on any given day, but where they're used, how they're bet, where the funds are located, what credit is necessary to continue to keep them going, and that is insider information. How they play that insider information seems to be to have basically taken that money, taken those funds, pretended they didn't know where it came from, and sat on it to avoid having to deal with that aspect in bankruptcy court.
Now, can MF Global happen again, and what are the global implications for JP Morgan and others who put themselves before customers and small investors as they rig the game, steal wealth, and confiscate wealth? What are the implications globally, if any, Nomi?
Well, what this is showing is that if this case basically gets dropped or disintegrates in time, and there's nothing but potentially a little settlement that's fine, that settlement has been, from the SEC, which seems to be what happens with Goldman Sachs, with JP Morgan, with Bank of America. Anything that happens, it's a tiny settlement, there's no criminal actions, and everybody goes about their day. The implications of that are that they continue to do it, that they keep on going. And it's not just JP Morgan, it's the big European banks, it's BNP, it's Credit Suisse. There's a South Korean bank that worked with Credit Suisse to buy $1.5 billion worth of subprime assets from JP Morgan Chase and Goldman and other companies that went to zero, that basically took the money of individuals in South Korea and their regular bank accounts who wanted to make a little bit extra in supposedly secure funds. That's gone. This is happening throughout the world. So the more these companies get away with it, the more they have the ability to not just be providing credit lines and confiscating money from the big partners like MF Global, but also having customers who have bank accounts with them, who they suggest to have funds with them, that they can then put some of the assets back in that don't do well and take money from people that way. It's a continued global implosion in the process because there's just no accountability. There's no regulators, not in the U.S., not in the U.K., not from some global perspective, who's putting any kind of a watch on this or any kind of a stop to it.
So as J.P. Morgan continues to steal from its own customers, this creates an economic black hole that necessitates the government to come out with these either bailout measures or austerity measures. And there seems to be no end to it, because if nobody is going to stop J.P. Morgan and other banks from stealing from their own customers and then get Washington to pay off the difference by either imposing austerity measures, as we see in Europe, or some kind of bailouts, as we see in the U.S., the end game, I would imagine, well, I can't imagine it. What is the end game?
The end game is, unfortunately, more of the same and bigger. J.P. Morgan Chase, in this situation with MF Global, didn't just steal from its own customers, it stole from the customers of its customer. So, you know, you're talking about multiple levels of stealing. Then there's the fact that as a bank that has the ability to trade and put money and put credit lines and look at all the other derivatives implications behind MF Global or any type of more complex company, as well as take deposits and give loans and try to offset funds onto its customers, there's no line anywhere. If you can take segregated accounts in a brokerage, if you can look at the deposits of individuals in a bank and use them as chips on the capital table in order to bet on other things, and there is no line, you continue to do what you're doing, and this situation continues to get worse. There should be unilateral, large black line between anything that has to do with a customer and activity for a customer, and anything that the bank wants to do from a trading perspective, for which it should not get bailouts, for which it should not be held unaccountable, and for which it should be criminally slapped with being destructed if it crosses that black line.
All right, Nomi Prins, we're out of time. Thanks so much for being on the Keiser Report.
Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Nomi Prins. She wrote the book, It Takes a Pillage. You got to go read it. You can follow us on Twitter or Facebook. You can send me an email at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.